Hi, my name is Reed Silverne. The name of this show is Fed Pride. The reason it's called Fed Pride is because I'm a federal worker and proud of it. Get rid of those taskbars. As you know, for me, today is Friday, May 30th. For you, it's probably the 1st it's probably the 2nd of June. No, 1st of June, which is a Sunday, or the 3rd of June, which is a Tuesday, depending on what channel you're watching me. Or if this is a rerun, you're looking through a lens deeply into the past. Either way, whatever I talk about today is going to be obsolete. I say the name of the show is Fed Pride. The reason it's called Fed Pride is because I'm a federal worker, retired, but now I'm going to say I'm a federal worker part-time. So I got a part-time job back with the federal government, so I'm a Fed again, and I'm overjoyed to be working for the federal government again. I had a wonderful retirement, and I still am retired, but I'm happy to be going someplace, having something to do 3 days a week, having friends to go to lunch with, and having something to do for 8 hours and a reason to get out of the house. So for me, it's a big, big step forward. As you know, I have a virtual co-host. Her name is Annie Mae. And even more than a virtual co-host, Annie Mae is my media advisor. I've been trying to upgrade my show to be more like real opinion shows. And she's been giving me some tips. One of the tips was to either go completely wonkish or to just casualize my act a little bit. One of the tips I didn't take was to put makeup on my forehead so it doesn't shine. But she's been giving me all kinds of tips. Last week, she went and she did focus groups with me, with her friend who's an expert in that kind of thing. And they showed tapes of my show. And unfortunately, I didn't do too well in the focus groups, which is understandable. One of the things that I consider charming about this show is that it's live to tape, which means if I fall off the chair, you see me fall off the chair. If I lose the sound, you don't hear me. And the other thing is that I talk about whatever I talk about. I'm not an arch conservative. I'm not an arch liberal. I am, however, a Republican. I consider myself moderate. This year I'm supporting McCain, but next time I might not support the Republican at all. I've voted against Republicans in the past. So I think what I think and I do what I think. And however, I am open to advice, and Annie Mae has some good advice. So what I'm going to do now is I'm going to call up Annie Mae over here, and let's see how we're going to do. Hi, Annie Mae.
Hi, Reed.
How you doing?
How are you?
Fine.
Annie Mae here.
Oh.
Well, have you been thinking about what we talked about last week?
Yes, I have. Yeah.
Focus groups?
Yeah.
Well. You know, the results of the focus groups were your style doesn't seem to be popular among conservatives.
No.
Or acceptable to liberals.
Wow.
Well, maybe we should think about what we want to do.
Well, I'm not sure. I'm not sure.
Now, we've also, something else came out of the focus group that I didn't mention last week.
Oh, what is that?
And that is your hair.
My hair?
Well, or like your not hair.
Oh.
Your lack of hair. Well, I don't mind. It's cute.
Oh, thanks.
But our viewers, maybe they prefer people with hair. Take a look at Keith Olbermann. He has hair.
Yeah.
Take a look at Chris Matthews. He has hair.
Yeah, he
Riley
does.
has hair.
Yeah, I think so.
In fact, most of the opinion talk show hosts have hair.
Oh.
Some of the guests do not.
Yeah.
And they don't focus very well.
Oh.
Well, you can do a number of things.
Oh, I'm
You
not
ought
sure.
to think about it.
Yeah.
But we talked about your shining head.
Yeah.
And a lot of people don't like it. A
Oh.
lot of people get blinded by it.
Oh, come on.
But hair solves that problem quite a bit.
Well.
There's hair club for men.
Oh, I'm not doing
There's
that.
all kinds of weaves.
Oh.
There's rugs. You can think about
Oh,
it.
I don't want a rug.
Well, why don't you just think about it?
All right.
Anyway,
Okay.
we're going to do a complete analysis
Oh,
on
good.
your image.
Oh, that sounds
See if
good.
you have one.
Oh.
Doesn't sound like you do now. And let's see how it goes.
All right. Let's see how
Well.
it goes.
Goodbye for now.
Bye.
Let's have lunch.
All right.
Talk about this.
Okay.
Ta-ta.
Bye.
Bye.
Bye. Okay. All right. That didn't seem to go too well for me again. I kind of like my hairless forehead over here. To me, it's part of my charm, and it's a take it or leave it thing, just like my shiny forehead. I mean, we'll see. I mean, I'll talk to Annie Mae. I'll see what she has in mind. But right now, I feel that my forehead is not a danger at any rate. So I've never worn a rug, and I don't think I'm going to start now. But we'll see. We'll see what happens. I'm not going to commit myself. Today we're going to talk about the CFTC, which is the Commodity Future Trading Commission. I've been talking a lot about the commodity crisis, about the agricultural crisis, about oil prices being sky high, about $4 gas, and all these other things, and what the causes are. If you've listened to some of my shows, I almost, in my own mind, for all that's worth, proved that oil prices really have no justification to be where they are. The amount of oil traded throughout the world is just about the same as it was last year and the previous years. The excuse of a collapsing dollar, the dollar stopped going down about a month ago. Gold and silver turned about 2-3 months ago. The traders tried to push it back up, but it didn't work. And now gold is under $900 and silver is under $17. If you put those in terms of euros and counter them with the price of euros, gold still has another $100 to fall down into the high 700s, and silver is still priced about $1 high. If you take the equilibrium price about a year and a half ago, and then you apply the value in euros, because the euro went up, the dollar went down. But the dollar has actually increased against the euro a little bit. It topped up at about 160 per euro. Now it's down to 155, I think a little below that today. So the excuse of high oil prices are caused by a weak dollar is garbage. Pure garbage, utter garbage. And even the financial shows aren't talking about that anymore. Latest thing, and the other excuse that they have is unbelievably high demand in China. Well, you know, that is just outright garbage. Demand has gone up in China and also India, but the fact of the matter is that China responds also to world recession. The United States is its largest trading partner, has a deficit of $250 billion a year with the United States, and even despite the increase in the price of oil, which takes out over $200 billion out of the American economy, net trade deficit has gone down, and imports have gone way down. And oil imports are part of imports. America is importing 300,000 fewer barrels a day of oil, so that's gone back on the market. Saudis have increased by 300,000 barrels a day, and even more so, the Canadians are increasing their production by about somewhere near, let's see if I can find my cursor again, somewhere near 1 million barrels a day per year. That's mostly out here in Alberta, where they just mine tar sands. And as long as the price is above $35 a barrel, they can mine them, they can melt them, and it turns right into almost semi-refined oil. So they actually save a little money on the refining cost. So Canada is a threat to the entire oil-producing world. And it has 1 trillion barrels in reserve, of which 600 billion barrels are recoverable. And right now they only produce 4 million barrels a day and export 2.5 or 3.5. And they're going to go up to 4 million next year. So there's more and more oil, and America is going to be using less and less. America is the oil consuming hog in the world. We consume almost 25% of the world's oil. Basically, we import about 9 to 10 million barrels a day, and we are importing 300,000 barrels a day less. I've talked about that on my show, which is a big drop, considering that the price of oil is dependent on a 1% growth per year in demand. Basically, just the reduction of the 300,000 barrels basically has pushed the demand down about the 1%, or at least half of that 1%. And the fact of the matter is the rest of the world is switching into less oil-consuming technologies. Brazil is completely out of the international oil market. They use ethanol. Europe is getting sick and tired of being dependent on Russia. And America passed a law basically increasing our mileage requirements on cars and light trucks by 40%. So within 12 years, we will use 2.5 million barrels a day less. And also, they're going to develop cellulosic ethanol. Cellulosic ethanol should come up to another reduction of 1 million barrels a day. Plus, we can get more and more from China. And what people don't seem to recognize is that if you look at America's production of oil proper, it's gone down. It's gone down from about 8 million down to 5. However, there's other things that are there. There's natural gas liquids. There's what they call other oils, premium on refining premium, which for some reason basically says, oh boy, America's producing more oil than is coming out, basically. And when you add them all up, America is back up to 8 million barrels a day. At its top, America was at 10 million barrels a day. At its bottom, it was at 6. So basically, America has increased its own production of things that either are oil or are substitutes for oil by an increase of 2 million barrels a day. And so we're importing less and we're using less, so on and so forth. And of course, the biggest thing is that the price of gas at around $4 a gallon, or a little bit less in the rest of the country, $4 a gallon or more, I think in 11 states, California being one of them. People have been shown in the last report to be driving 4% less, which is a 2% drop in the demand for overall oil, because basically half of our use of crude oil is in cars and light trucks, just normal transportation. So what does this mean? This means that the short-term look for oil is terrible. there's a reduction in demand. There's no increase. China is looking at inheriting our recession, in which case it won't be increasing its demand the next year. India is also very much dependent on us for its economy. So the short-term demand is down. It's not up. So why is it at $135 a barrel last week? And what happened? For the first time, it's gone from 135 to 127. However, there are spikes, constant spikes. I'm not able to bring up my day-to-day chart because I put it in the wrong Word document, but I'll do that next week or some other time, maybe the week after next. But you'll see these big spikes in volume, which is an indicator. Every time there's a set of big spikes, it's all long, and then the price of crude oil goes back up. And this has occurred over and over again. There was a breakdown when the dollar stabilized against the euro. The euro went down from 160 to 155. There was a breakdown in the price of crude that week, and then there was an instant spike in demand and spike in volume all along, and it pushed the price back up. And then we had that week when it went up to 135, which seems to be so far the top. And that's the week that Goldman Sachs said, we expected to go to 150 because they had been predicting 101. 101 was already too high for the market. What's the long-term demand? The long-term demand is even worse. Long-term demand is America is going to wipe out the increases in third world demand and China and India demand over the next 10 years completely. So if their demand goes up, and there's no reason why it should, because the Chinese want to convert to to fuel cells. They already have hired GM and put the largest fuel cell research facility in the world in a suburb of Shanghai that's owned by GM. And the Indians are developing small cars that work on compressed air. And of course, the compressed air, first you have an electric air compressor, you plug it in your backyard or in the local gas station, compresses the air, and then you can actually hold enough compressed air to run these little bitty engines for 125 miles. So we have hybrids, we have electric. Israel is going completely on electric, and Denmark is thinking about adopting their system. So the use of oil in the long run is bound to collapse. So why is it so high? Well, it's so high partially because in the year 2000 they passed the Commodities Modernization Act of 2000. And in there was a complete pass, no reporting, no oversight whatsoever for exempt commercial commodities, ECMs, exempt commercial markets. And among the exempt commercial markets is crude oil, natural gas, all the energies. And they also had exemptions for agriculturals as well, where people, in fact, investors and large companies who are either hedge funds, and they they weren't called hedge funds, they were called sophisticated persons, but they have to have investors that are large dollar, or broker dealers who were supposed to be overseen by the SEC. Of course, the SEC didn't do it. Or non-U.S. persons. Those are sovereign wealth funds or hedge funds that go to the Cayman Islands or some other place like that. I think the Cayman Islands right there. And basically register overseas. And they take a lot of foreign clients who don't pay U.S. taxes. So all of those were completely exempt. They could own as much commodities as they want. They could trade them. They could set up funds. They could be actually sold as investment vehicles. And the CFTC, the oversight agency for those particular commodities, would not be allowed to register them, to tell them to report, And they didn't have any controls over margin requirements, so that they could borrow 100% of the money and invest it to push up the price of a commodity and sell it and make a profit. So basically, we had a situation that was just asking, in fact, begging for market manipulation, cheating, thieving, and control of our market commodities. In addition, and this is not an addition, but that broker-dealer exemption allowed the setup of what we call index funds. Index funds basically are supposed to follow the price of whatever the commodity is. In this case, crude oil, but it really was disastrous in wheat and rice and so on and so forth. And basically, what they would do is if people invested in this index fund, the index fund would only buy. So that basically created a situation where in some cases 40 to 60% of all the open interest, which is all the ownership of the long futures contracts, would be just the index funds alone. And they claimed, well, that doesn't affect the price. Well, the fact of the matter, if the price goes up a penny, these people are going to buy it for an extra penny. If it goes up $1, these people have to buy it for an extra $1. And on top of that, if it goes up $1 and they buy it for $1, then they can say, look, our index fund went up. We just made $1. Well, very, very important thing happened. On May 15th, the Farm Bill passed, and had to pass twice because they left some legislation out of it, and I believe this was part of it. So they repassed it at a larger majority, especially in the Senate, that could beat back and overcome any veto. So there's no veto on it. So basically, and it passed the conference between the Senate and the House. And basically what they did is they removed the Enron exemption. Now, nobody really knows what the Enron exemption is, but I do know what actually got passed. And the CFTC basically announces multiple energy market initiatives, and those are based on the new agriculture bill. And basically what they do is immediately implements expanded information sharing with the UK. Now, there's been some cheats, and what they would do is a hedge fund would go in there, they'd buy in the during our daytime to push up the price, and then they go into the UK market and either buy or sell. There's a very notorious example called Amaranth, where they basically stole $9 billion, and then they held it too long and ended up losing $6.5 billion. For the first time, they can demand large trader information. They're going to have these large traders actually report to the CFTC every day. Plus, there's going to be monthly reports. There's a near-term commitment to enhance trader information. They're going to be improving the data formatting, but most of all, they're actually going to put margin controls so that these, I'm just going to call them what they are: cheats, thieves, and foreign manipulators have to put some of their own money into these trades. So they're going to have capital requirements for the first time since 2000, and they're going to have to have limits on the margin, which means that they can't just borrow $1 billion, push it into the wheat market, and push up the wheat market to the point where there are riots, and then make money off of wheat. So there's going to be large trader reports. There's going to be position limits, so they can't just buy the entire availability of futures trades and then corner a market anymore, which they've done. Amaranth did that. Prevent manipulations, and if the market goes out of control, the CFTC can actually take over certain markets and energy derivatives that they couldn't even touch, they couldn't even oversee, they couldn't even ask for information up until now. They're putting these forward on an emergency basis, but the final rules will come out in 180 days and be absolutely in force in 270. My name is Reed Silverne. The name of this show is Fed Pride. Reason it's called Fed Pride is because I'm a federal worker and proud of it.